Hey guys, welcome back. So in this video we're going to be talking about breakouts, and for this I'm going to be updating here on the Bitcoin Cash versus the US dollar. Right now I'm on the 4-hour candles. The reason I have this blue line here, this support line here in blue, it's because this is how I had this line yesterday before it broke out of this line, before we started trading below this line. Now, I tweeted this yesterday. Where is it? Here. So this is this black support line down here is how I have the blue line today in my chart, the one I just showed. So I tweeted this out yesterday. I said risk 1%, reward 14%. If we were going to break out of this triangle here, whether it's in the downside or in the upside. So I said, if you set proper stop losses and only enter after a clear breakout, you can put your entire account in here. If your stop loss is hit, you're only losing 1% of your account. If you don't know how to spot a clear break or how to set stop losses properly, maybe stay away. All right, so what was the signal to enter this breakout if it was actually breaking out for good? Well, the first signal for, to spot any breakout is having the first candle close outside of the line and the next candle opening outside the line, whether it's in the upside or downside. When you have the first candle closing outside the line and then the next candle opens outside the line, that's your signal number one for the breakout. What's the confirmation signal? Well, it's the volume. The confirmation signal is the volume. So what happened with this yesterday? So this was the support line, how I had it yesterday. Now it's in blue and it broke outside the line. By the time this candle opened here, I mean, these are the 4-hour candles. So by the time the candle closed, after 4 hours going, up and down here very slowly, after 4 hours, the volume was not even above average. So you can see this orange line that goes through the volume. This is the average volume for the past 20 bars. So it was not even above average after closing the candles 4 hours later. So, but at the moment of opening the candle, this was going up and down very slowly here. It was not creating a lot of volume here. So you could kind of anticipate that was not going to be a real breakout, and the target, down below was probably not going to be reached. That was the target, on the downside. If it was going to break in the downside, the target was all the way down here for $967. But at the moment the candle closed outside and the next candle opened outside the line, you could see there was no volume confirming a real breakout. So it was kind of easy to anticipate this was not going to be a breakout. And I actually anticipated, as soon as the first candle closed outside the line, I already anticipated this was going to bounce on the 50-period moving average here in the 4-hour chart. It was going to bounce it, and then we would have to, readjust this triangle and extend it and make it so that it would go sideways for a longer time. So for the record, I shared this, but I put this one only for the premium group. So you see here, it was just opening outside the line, right? The blue line here, it was my old black line. So it was only opening here. These are the 4-hour candles, as you can see here, and it was only, not even half an hour in. So it was just opening this candle. I was already saying, hey guys, this is likely going to bounce on the 50-period moving average because there's no volume confirming here. The volume continues to tighten. So I said the blue line is how I had it before, and it did break out. So it should go down to at least the 50 moving average. If the 50 moving average bounces it, then you can move the support line to where the black line is and the triangle would continue for longer. By the time it bounces, you have time to exit for a little gain or a break even, you know, given, assuming you entered this trade on the breakout. This trade, it's not so difficult. It's not moving very fast and the volume is not there supporting a real breakout. That's why I think it might bounce back up. So I was anticipating from the very moment it actually broke out, I was anticipating it would bounce on the 50 period moving average, creating a higher low, and then we would be extending this triangle. The way you can spot these things, you know, this kind of fake breakouts, is by looking at the volume. So this is what happened here. Actually, let me delete all these things. By the way, guys, this is from the video I just made. I just made a tutorial on how to set and manage stop losses. You can find this video on my website. This video is class number 2 of my second trading course, which is on money and risk management. It's not on YouTube. You need to go to the website to find it, but you can find it here under free education, free courses. And here you have my my course level 1, technical analysis basics, and course level 2, risk and money management. And inside this course you can find my video from today. I just made this video this morning, stop losses. But please watch my take my course level 1 before you practice any strategies discussed here in the trading course level 2, or you might lose money. I have a bot that will send notifications here every time I upload anything to my website, anything that's free and open, but it's not on YouTube. And now and then I share some signals here, some polls and other stuff. So it's a good source for education. But going back to the chart here, yeah, so basically that was your, you know, your lack of volume was warning sign that this was not going to be a real breakout, so the target on the downside was probably not going to be reached. However, because a trend line was broken, you can still expect a vertical movement down. So it doesn't really matter if the target was not going to be reached because there was no volume supporting a trend line. When a trend line breaks, it breaks. That's enough to drive the price down, you know, quick, because is where traders have their stop loss set. And so as soon as it breaks, you see a sell. There's going to be a sell-off usually. So it was still okay to enter this trade here. The signal to enter the trade was exactly as I said. This is how you play breakouts. You enter the breakout when the first after the first candle closes outside the line and the next candle opens outside the line. Here is your entry level. So you would have still made some profit from this entry to the moving average. It was expected it would go down to the moving average, so this would have been a little 2.5% profit. Or you could have just opened the trade, and as soon as it's dumping, you just lower your stop loss to your entry level, so that if it bounces and reverses, which was expected, then this trade doesn't cost you any money and you still have all your money to enter later when you have the real breakout. When it breaks out for good, you can enter again. So this is expected to break out, and I would say it's going to break out violent, because this volume is getting very, very tight, and this is just how markets work. When the volume gets really tight, you usually have violent movements, whether it's in the upside or in the downside. Now we already had 2 touches in both sides, 1-2 in the upside and 1-2 in the downside. So usually, more often than not, breakouts happen at the third try. So whether it's going to be in the upside or in the downside, more often than not, it'll happen in the third try. So here, the third time, it's already touched and it tried to break it. So if it comes down and bounces on the moving average and goes back up again, chances are it's going to end up breaking in the upside here. And if we get a real rejection here, if this goes as low as, you know, getting near to the support line, then, well, chances are it's going to break in the downside. But of course, you want to wait for confirmations before you enter either side, either way. You wait for the first candle to close outside the line, and then the next candle, if the next candle opens also outside the line, then you can enter your trade there. Keep your stop loss tight. The stop losses for these trades are like around 1% risk. So you can basically put almost your entire account in here, and if you are wrong and your stop loss is hit, you would only lose 1% of your account, and the reward is very good. As you can see, it's 15% reward, and same here, almost 15% reward. So, you know, I mean, more or less, you never know exactly at what level it'll break out. So at the time that it breaks out, then you need to adjust your little box here, you know, but it's more or less 1 to 15 risk-reward ratio. So trading doesn't get any better than this. If you've been waiting for an opportunity to take a trade, this doesn't get any better. So long as you can spot a real breakout, so long as you know exactly when to enter, when the breakout is actually happening, and you know how to set stop losses properly, this is like, it just doesn't get any better for a trading opportunity here. So that's the situation right now, guys. The volume continues to go lower and lower, so I would expect a vertical movement at some point. But of course, now this triangle, it's been extended, so we could still be stuck here until, let's see, let me see if I can do an estimate here. If this goes until the end of the triangle, these are the 4-hour candles. This one just opened now, so 4, 8, maybe 16 hours. From 2 hours to 16 hours, but this would happen, before 24 hours, I would say, or maximum 24 hours, I would say before one day, this thing needs to break at some point. That's my video for today, guys. That's my little tutorial on breakouts, and I'm gonna leave it here. Thank you very much for watching, and see you soon. Bye.